Hello guys, welcome back to the channel. Today, we're breaking down credit scores, what they are, why they matter, and how you can improve yours. Whether you're looking to get a loan, buy a house, or just boost your financial health, this guide is for you. What is a credit score? Your credit score is a 3-digit number that represents your creditworthiness. It's based on your credit history and helps lenders decide if you're a low-risk or high-risk borrower. Scores typically range from 300 to 850, with higher scores meaning better credit. What affects your credit score? Several factors influence your score, including payment history, 35%. Paying bills on time is crucial. Late or missed payments can lower your score. Credit utilization, 30%. The percentage of available credit you're using. Keeping it below 30% is ideal. Length of credit history, 15%. Older accounts contribute positively to your score. New credit inquiries, 10%. Too many credit applications in a short time can lower your score. Credit mix, 10%. Having different types of credit, like loans and credit cards, can help. How to improve your credit score. Pay bills on time. Set up autopay or reminders to avoid late payments. Reduce credit utilization. Try to keep your credit card balance below 30% of your limit. Avoid opening too many accounts at once. Multiple hard inquiries can temporarily lower your score. Check your credit report. Use free services like Credit Karma or annualcreditreport.com to check for errors. Keep old accounts open. Even if you don't use them, older accounts help your score. A good credit score opens doors to better financial opportunities. Have you checked your credit score recently? Let me know in the comments, and don't forget to like and subscribe for more financial tips. See you in the next one.